Welcome back to Gold Rush Reporter, your source for real gold and silver analysis. I'm your analyst, bringing insights the mainstream doesn't cover. Today, we're focusing on a critical moment for precious metals and the stock market. Before you scroll past, ask yourself, are your investments really protected? Because what I'm about to show you could completely change how you view silver, gold, and stocks. If you want to stay ahead, hit subscribe and ring the bell. These updates are designed to give you an edge. At this moment, the silver chart is essential. Forget whether it goes to $50 or $100. That's just noise. The real story happens when the stock market enters a major bear phase. That's when gold and silver demonstrate their true strength. We are witnessing capital rotation in action, with money gradually moving out of equities into safer assets like precious metals. If you've been following recent updates, you know gold and silver have quietly outperformed technology and other stocks for months. But now the gap is widening, and the implications are serious. We're analyzing silver prices against the Dow Jones Index. Historically, silver has been more flexible than gold, making it a better reflection of market forces. Unlike gold, which was once pegged, silver responded directly to supply, demand, and investor behavior. This makes the silver chart a more realistic gauge of how capital rotates during stress periods. Look at the support and trend lines that have held for decades. They show the points where money historically shifted and how markets reacted. When silver outperforms stocks, it's a warning signal that a bigger shift is on the horizon. Right now, silver is showing patterns reminiscent of the late 1960s, just before the bull run of the 1970s. Key touchpoints along this trend line indicate where the market may pivot. A break below these lines, combined with moving averages and indicators like the Ichimoku cloud, could mark the start of a significant bear market in equities while precious metals continue their climb. These signals are not random. They are a rehearsal for a larger event, a super capital rotation that will reshape portfolios. The stock market may appear stable, but silver is quietly signaling major moves are coming, and investors who recognize this early will be in a strong position to protect and grow their wealth. If you're following this analysis, take a moment to consider your portfolio. Are you ready for a shakeup? Comment below with the metals or stocks you hold, and we'll break down where the real opportunities lie. Subscribing ensures you get these insights before mainstream media catches on, helping you make decisions with real data rather than speculation. At this stage, the charts are showing a subtle but important shift. Silver is climbing steadily, but the real story is how it interacts with stocks, especially the Dow Jones and S&P 500. When silver outperforms equities, it's not just a temporary spike. It reflects deeper capital rotation, where investors are starting to move funds from riskier assets into tangible wealth like precious metals. Over the last several years, this process has been gradual, almost invisible, but the trend is clear. Historical patterns from the late 1960s and early 1970s show similar moves, where early rotation signaled major market changes ahead. The current silver chart shows multiple touchpoints along a long-term support line that has been relevant for decades. These lines aren't just theoretical. They represent levels where investors historically shift money and where automated trading systems react. As silver approaches key resistance points, we can anticipate a reaction that may either accelerate its rise or trigger a temporary pullback. This is why monitoring the relative movement of silver against the Dow is critical. Capital rotation doesn't happen in isolation. Stocks might appear resilient, but the indicators suggest that once rotation reaches a tipping point, equities could experience sharp corrections while silver and gold surge. Technical indicators like the 72-month moving average and the Ichimoku cloud provide context. When silver moves above these levels, it signals strength relative to the broader market. Conversely, a drop below them could indicate a pause or correction. but the long-term trend remains bullish. We are currently in a pre-super capital rotation stage, a rehearsal for a larger shift. This stage allows investors to position themselves strategically before a more dramatic rotation occurs. Historical examples show that even minor breakouts or pullbacks in silver often precede much larger moves in precious metals and equities. Miners also play a crucial role. Their stocks typically amplify silver's movements, offering clues about the intensity of market rotation. Recent activity in mining stocks indicates strong upward momentum, aligning with the pre-super capital rotation phase. While volatility is expected, the overarching trend is clear. Money is flowing into tangible assets, and the market structure is setting the stage for a significant shift. Observing miners alongside silver provides confirmation that this isn't just a paper rally. It's a realignment of capital, affecting multiple layers of the market. Investors need to consider allocations carefully. Historical capital rotation events show that the most gains occur when precious metals outperform equities during a broader market downturn. By analyzing these charts, you can anticipate periods of high leverage demand, margin calls, and liquidity events that follow major stock market corrections. Silver's trajectory isn't just about price, it's a signal of systemic shifts that affect bonds, stocks, and fiat currency. The insights gained from these patterns can guide positioning in gold, silver, and mining stocks, helping protect assets during volatile periods while positioning for outsized returns. Silver is telling us a story that gold alone cannot. Its price action is leading the market in terms of capital rotation signals. When we compare silver to the Dow Jones, the relative movement highlights how money is shifting from equities into hard assets. This isn't a short-term trade. It's a reflection of long-term trends that have repeated over decades. From the late 1960s to the early 1970s, similar patterns occurred where silver's breakout preceded a broader bull run in precious metals. By studying these charts, we can anticipate where capital is flowing and how stock market corrections may accelerate silver's performance. The interplay between silver and the stock market is crucial. When equities begin to lag behind precious metals, it signals the early stages of a broader rotation. Currently, silver is climbing alongside stocks, which is a prelude to a more dramatic phase. Historical data shows that once equities start rolling over, while silver maintains strength, the gains in silver and gold accelerate dramatically. This is why monitoring both markets together is essential. Investors who recognize this relationship can adjust their portfolios strategically, positioning themselves in physical silver, gold, and mining stocks to benefit from the next phase of the supercapital rotation. Technical indicators confirm these movements. The 72-month moving average and the Ichimoku cloud provide a framework for understanding the trend strength. Silver trading above these levels signals bullish momentum, while any drop below may indicate a temporary pause but not a reversal of the long-term trend. The support lines drawn from decades of historical data act as a guide for anticipating market reactions. These are not arbitrary. Institutional algorithms, hedge funds, and active traders react to these levels, reinforcing their significance. As the pre-super CRE phase progresses, these touchpoints will become crucial in confirming breakout or pullback scenarios. Mining stocks add another layer of insight. Historically, miners amplify the gains seen in silver, reflecting both investor interest and operational leverage to the underlying metal. Current trends show miners moving higher, signaling that the market is beginning to price in the next rotation event. While corrections are inevitable, these early signals indicate strong upward momentum for both silver and its producers. Keeping an eye on miners allows investors to validate silver's movement and gain an additional opportunity to participate in the upcoming surge before broader market recognition occurs. Investors should also be aware of macro factors influencing this rotation. The combination of rising debt, currency debasement, and central bank policies creates an environment where hard assets outperform traditional equities and bonds. Silver's behavior is a leading indicator in this scenario, suggesting that allocations in precious metals should increase in anticipation of higher volatility and potential equity market downturns. The current phase is critical. It's not the final move, but a preparatory stage. Understanding this allows investors to position themselves effectively, balancing risk and opportunity as the market transitions into a larger capital rotation event. As we move further into this pre-super capital rotation phase, the charts indicate that silver is poised for more dramatic moves. The historical parallels from the late 1960s and early 1970s show that once the Dow Jones begins to underperform silver, the pace of gains in precious metals accelerates significantly. Right now, the Dow is still climbing alongside silver, which suggests that we're in the preparatory stage. The real explosive phase begins when equities falter, while silver maintains strength. This divergence will create a perfect storm for a rapid rise in silver, followed closely by gold, as investors rotate capital from traditional assets into hard money. Technical analysis supports this view. The long-term moving averages, including the 72-month and 8-year indicators, are still being tested by silver and gold. Once silver decisively breaks above these levels, while the Dow begins to show weakness, we will likely witness a sharp spike, similar to patterns observed in the 1970s. The Ichimoku cloud is also a critical tool here, signaling bullish or bearish momentum depending on whether prices remain above or below the cloud. Currently, silver's position above key support lines suggests that the market is building energy for the next big move. This is not short-term noise. It is a precursor to a multi-year capital rotation that could redefine investor portfolios. Mining stocks are following this trajectory closely. Their performance often leads or amplifies movements in silver, providing a tangible reflection of market sentiment. During the lead-up to the Super CRE, miners' shares typically rise ahead of broader market recognition, reflecting both operational leverage and investor enthusiasm. Current trends show miners moving upward in anticipation of this next phase, reinforcing the idea that we are on the cusp of a significant rotation event. Corrections may occur along the way, but these early gains signal strong upward momentum and confirm that capital is already beginning to flow into precious metals. Macro conditions further strengthen this narrative. Rising debt levels, inflation pressures, and central bank policies are eroding the value of fiat currencies, making hard assets increasingly attractive. Silver, with its dual role as both an industrial and monetary metal, becomes a leading indicator of these shifts. Investors who understand this can strategically position themselves with allocations in physical silver, gold, and mining stocks, balancing their portfolios to take advantage of the upcoming wave while mitigating risk. The pre-super CRE is essentially a practice run, providing clues for timing entry and sizing positions before the full capital rotation unfolds. Finally, the relationship between gold and silver remains central to understanding the next moves. While gold is often the safe haven, silver provides earlier signals of market rotation due to its volatility and industrial demand. Watching silver's breakouts, pullbacks, and trends relative to the Dow and broader equities reveals where capital is moving and how aggressively it is rotating. This is the window for informed investors to act, preparing for a period when precious metals outperform almost every other asset class. The key takeaway is that patience, observation, and strategic positioning in both metals and miners will allow investors to maximize gains once the Super CRE officially begins. We've analyzed the silver and gold charts, the miners' performance, and the broader capital rotation patterns. It's clear that we're on the edge of something significant. The pre-Super CRE phase we're in right now is setting the stage for a potential surge in precious metals that could outperform traditional markets by a wide margin. Silver is sending early signals, gold is holding its strength, and miners are already moving in anticipation. Investors who understand this dynamic and position themselves carefully, allocating across physical metals, mining equities, and diversified portfolios, can benefit greatly when the full capital rotation event unfolds. The charts show us that timing is everything. Just like in the late 1960s and early 1970s, the initial moves in silver and gold may appear subtle, but the implications are massive. When the Dow begins to weaken relative to silver, that's when real outperformance occurs. This is not mere speculation. Historical data combined with technical indicators, long-term moving averages, and the Ichimoku cloud all confirm that precious metals are about to take the lead. Understanding these signals now gives investors a head start, ensuring they can react strategically rather than being caught off guard when the market pivots sharply. It's important to recognize that these moves are part of a broader macro trend. Rising debt levels, inflation pressures, and a weakening dollar create the perfect environment for hard assets to regain dominance. Gold and silver are not just safe havens. They are active stores of wealth in a world where fiat currencies are increasingly vulnerable. Miners, too, offer amplified exposure to these trends, making them essential components of a well-structured precious metals strategy. Observing their behavior now can provide early insight into the timing and magnitude of upcoming market moves. For viewers of Gold Rush Reporter, the takeaway is simple. Stay informed, watch the charts closely, and understand the patterns that have historically signaled major capital rotation events. Silver is the early indicator, gold is the anchor, and miners are the accelerators. Together, they form a roadmap for navigating a market that is about to undergo a transformative shift. Allocating wisely, keeping an eye on the technical signals, and preparing for volatility will allow investors to protect their wealth and potentially profit as precious metals rise relative to traditional assets. Thank you all for tuning in to Gold Rush Reporter. If you found this analysis helpful, please make sure to like, share, and subscribe to the channel so you don't miss any of our weekly updates. Hit the notification bell to stay on top of all our insights into gold, silver, and the markets that shape them. Your support helps us continue providing data-backed, expert analysis to help you make smarter investment decisions. Until next time, stay alert, stay strategic, and keep watching the metals that protect and grow your wealth.